I'm going to share with you eight best practices when you're filing your 1040 tax returns in this video. So we are now going to look at the 1040 tax return, and this is useful video if you are an American living in the UK, or if you're British and you've moved over to the great USA. This is just some ideas that I've had in regards to the 1040 tax return. So let's get underneath the hood of what is the best practice for your 1040 tax return. Here we go. So first of all, I have worked with a professional. Really important that you at least have someone overview your tax return, especially if you're new to being an expat. You could make some fundamental errors here, and I'll highlight those later on. So that's the first one right there. I am not sure who's going to be picking up these, but these post-it notes I'm just throwing away. But it sounds like a good gimmick. The second one is keeping your paperwork in order on a monthly basis. You know, doing your tax return, if you're British versus American, you have to understand that you've got different calendars. So in America, you've got the tax year, which is January to December, but in the UK, you have the tax year, which is 6th of April to the following 5th of April. So things are out of kilter already, which is a total utter nightmare, as you can appreciate. So make sure you have monthly files to compile your tax returns. So really important to do that. And I kind of did that throwaway of the post-it note and it didn't work out. So I'm going to try it again. Let's see if that worked. Third thing is really looking at your standard deductions. I've highlighted those there. You do get a standard deduction, which I've highlighted on the screen here. I'm just going to zoom this in. So as an American or UK citizen doing your 1040 tax return, doesn't really make much difference, but you do get this standard deduction, single person, as $12,550, which increases to $25,100. So the first mistake here is not getting married. I mean, being married and getting this extra kind of allowance would be great, right? Especially if one of you are not earning, and you could do a combined tax return, which you can't do in the UK. So, hey, get married. All right, that's definitely not one of my tips. But by the way, before you tell anyone, I'm happily married. So don't say just because I'm married, don't do the marriage thing. I'm not saying I'm not, let's just move on. Okay, so the next thing on the standard deduction, which is my third tip, is really looking at your standard deductions and then itemized billing. You might have medical care, you make other kind of deductions, charity, etc., that you could put into your expenses to reduce your tax liability. So one of the things you can do to minimize tax is look at your standard deduction versus your itemized billing. So itemized billing, what can you offset? Well, taxes, your property taxes, your state taxes, local taxes, all that can be offset against your standard deduction. So you need to compare it. Medical bills, which could be a huge one. Again, look at your standard deductions. Can you use that standard deduction to make your life easier? Or can you itemize your expenditure and get a maximum write-off, which is much better? So again, tax tip number 3, look at your standard deduction versus your itemized billing. Wow, that's a great shot. Okay, so the next one I'm going to look at is use your home as a vacay. Now, if you're British, you're thinking, what's he on about? Vacay is a vacation home or holiday let. So you can, as an American home, you can have American home, let it out for 14 days, and guess what? You do not pay any tax on the income you generate as long as it's not rented out for more than 14 days. So there's your tax tip number 4 on your 1040. Okay. The next one is set up a business. So one of the things you could do on adjustments to income is really look at minimizing your income that you're going to be taxed on. One of them is if you have a self-employment business, you can offset your losses against your activity if you're active in that business. Okay, so you have to be active. But what's great about that is that you could easily go on holiday. You might be able to get some of the travel costs written off against your 1040 tax return if you can mix in business with pleasure. So if you, like I did before, I had a vacation in Orlando, but I also had an exhibition. I had a few meetings in Orlando, so my travel cost was pretty much partially written off against my tax. So that's something that you need to think about as well when you are doing your tax return. Start a self-employment business, get your losses off against your income as a whole. So great way, and get some travel costs for your holiday. So perfect. That's not such a good throw. Next one is looking down. Capital gains, line number 7. It says here, capital gain or loss, attach Schedule D if required. If not required, check here. But one thing I would say to you is that many of us have assets that are dogs. They bark, and they bark because they do not make you any money at all. So it is better just to dispose of those nagging dogs and, take them off the lead. Just let them fly off and let them, cause havoc somewhere else, right? But it's not in our portfolio anymore. So if it creates you a loss, you can offset those losses against assets that make you a gain. Therefore, you do not pay tax if you have enough losses to offset your gains. So good way of doing that. So reduce your tax and get rid of those rubbish assets as well. So that's top tip number 6. That didn't work, did it? So let's try that again. There we are. Number 7, let's go down this tax schedule here. There are other areas you can do this, but line number 29, really fascinating. American Opportunity Credit Form 8863. And this is a great way of you being educated and being able to offset your costs against your tax return. So you can get up to $2,500 offset against your tax, which is a great way to get educated, generate more income in the future, and get a tax write-off. Wow. I have a lot of post-it notes on the floor. Number 8 really is going back up the tax return. Sorry for making you dizzy here. But wages and salaries, etc. If you have earnings, so if you're an American especially, and you need to do a 1040 tax return, then this will be really perfect for you because you may have foreign income. But what you do need to think about is, well, should I use a form 2555, which is the foreign earned income exclusion, crikey, I'll get there in the end, or the foreign tax credits, which is form 1116. So really comparing those, you may be able to utilize the foreign tax credit to carry forward your taxes, because let's not forget, if you have your American living in the UK, you probably will be paying more tax in the UK than in America. So it's more likely better for you to use the form 116 than it is the foreign earned income exclusion. I did it right that time. So that's tip number 8. Wow, here we go. Top tip number 9. Which is the health savings account, which is going to allow you to contribute $3,650 into this HSA account. Now that could be used for your medical expenses, but don't forget that if you amount enough money into your HSA, eventually you should be able to invest in real estate property as well. So what a great way to get a tax write-off and to invest in your future. And if you're British moving over to the US, maybe do something about your teeth. So that is the top tips for a 1040 tax return. Hopefully that's been useful and start to save on your tax bill. Hopefully that video was useful for you, but please do not stop there. There are plenty of videos that I know that will help you build your wealth whilst reducing your tax liability. And in this video, well, this is the one I think you should be watching right now.